Singapore has seen a fall in listing volumes, down 53% year on year, which is quite significant if we look at historical standards. And also the number of deals are down. There have been some listings of note. So United Hampshire's $310 million and Elite Commercial's $170 million listings were significant deals this year. I think the key issue for Singapore in the listing market here, which is driven predominantly by REITs, is we've seen headwinds for specifically hospitality and retail REITs. However, if you look forward and we look towards the second half of this year, there could be some bright spots if we look at, say, data center and logistic REITs, which can benefit from the significant surge domestically in Singapore around e-commerce spending. But so often you have to put Singapore's listing market in the global context. And despite global IPOs being down 6% overall, ECM is up globally 40% as companies continue to recapitalize their balance sheets. And we've also seen a lot more companies tapping the bond markets, with DCM volume up 20% as well. And the other thing you need to look to for the listing environment is volatility. And if we're looking at the US as a benchmark, we know VIX is moving down. And if we see VIX come below 30, you could potentially see a mass reopening of the US IPO market. And that's often a bellwether for trends globally. And as investors look at that market, they will then look closer to home at opportunities that will be on the ground here.
Right. Romaine, good morning. Then we're also joining in the discussion. You're talking about how for Singapore IPOs, a major dent has been in the REITs market, primarily being in a wait and watch mode. When do you see that market picking up?
It depends on macro headwinds. So if you're looking at REITs is very cyclically dependent. And currently, with uncertainty, with volatility, REITs are specifically taking a wait and see approach. But I think in terms of things picking up, things like early stage cornerstone investors coming in on deals will become increasingly more important. Cornerstone investors play a significant role in Hong Kong, and you mentioned Hong Kong at the top of the segment there. Singapore would, I would imagine, be looking at bringing in more of these early cornerstones, as they're often more enthusiastic buyers. They de-risk transactions. They typically also drive momentum and encourage some other potential buyers to come in on the back of it. So these are all different factors that will impact the listing environment. We've also seen structural changes due to the current situation around how listings are being marketed. Increasingly, roadshows are now being digitized. Now, what that does is it makes roadshows more scalable. Management can speak to a wider range of investors, but it's still not clear as to whether losing that eyeball to eyeball approach makes much of a difference on these listings going forward.